Have you ever looked at a USDA loan? Do you just assume that those are only for farming communities? I want to share with you today an introduction to the USDA loan, including some recent updates to the income limits on a USDA loan. My name is Miles Pitcher. I'm the owner of Superior Lending. I'm located here in Utah. We've been in business 21 years now. Please do me a favor if you can to subscribe to this channel, like this video. I appreciate it. All right, so on a USDA loan, let's talk about some of the pros of it and explain about it. Yes, it is really from the USDA, the same people that inspect your meat and stamp that your meat is good in the grocery store. But on this loan, and there are different kinds of USDA loans. The ones that we offer are called USDA guaranteed loans. They are 100% loans, require no down payment. They also have a very low, what they call a guarantee fee or annual fee. These fees are very similar or act just like private mortgage insurance or the FHA mortgage insurance PMI and upfront mortgage insurance premiums. So let me explain what they are for the USDA. So when you buy a home with a USDA loan, there is a 1% guarantee fee. So whatever the purchase price is, they take 1% of it and it is rolled into your loan. You can pay it out of pocket if you want, but everybody rolls it into the loan. And then the annual fee is 0.35%. And what that is you take your loan amount times 0.35%, you divide by 12. That is what your monthly mortgage insurance payment looks like. And I'll show you some actual numbers here in a minute on those. But the reason why that we like USDA is that their fees are quite a bit lower than FHA. They can be lower than the conventional PMI depending on where credit scores lie. VA does not have any of these fees. They do have a funding fee, which can be expensive, but for the most part, USDA for a 100% loan, these are super low mortgage insurance or guarantee fees. We also love that the rate on the USDA loan is lower than conventional. It's a government guaranteed loan and therefore carries a much lower rate. I'll show you an example here in a minute. Some of the cons that we don't like about it is that on a USDA loan, they definitely are tighter on debt ratios than an FHA loan, a VA loan, a conventional loan. So you have to watch out for that. And they really are tight and can be tight on what we call the friend-in debt ratio, which just takes into account what is your monthly income and what is your housing expense. And those can be super tight. Then they also look at what we call the back-end debt ratio. That includes the new mortgage payment and what the monthly payments are on all of your other debt. The other thing with the USDA loan is there are only certain areas or geographic areas that are eligible. I'll include a link in the description of this video where you can go and type in an address and see if that home is eligible for USDA. Now the news right now or the update is on income limits. With a USDA loan, if your household income is greater than the limit, you can't do a USDA loan. And they have just raised those income limits. And when I say household income, that means maybe a husband is going on the loan, but the wife is not going on the loan and she works. Well, they would still ask, how much does she make? They would combine it with the husband's and make sure that you do not exceed the income limit. The other feature of it is you cannot own any other real estate. So it does not have to be a first-time home buyer, but you can't own any other real estate. The other thing with a USDA loan is you can only do it as a down the road. You can refinance from a USDA to USDA, but you cannot do a refinance from a conventional FHA, VA into a USDA loan. So the only way to enter into a USDA loan is to do it as a purchase. All right, here's a map. When you go to the website with the USDA and you type in an address to see if it is eligible for USDA financing, it'll pop up a map. And if it's in this orangish yellow color, it is not eligible. But there are other areas you can see out here in Tooele, Payson, up around Heber City, Park City. Those are all eligible areas. So you can find out for your city and state by typing in an address. Then I'll put a link for this also in there where you can go and look and see what the income limits are. And I've added some arrows in here. So for the Provo-Orem area, if you look at this first red arrow, it says the guaranteed loan, moderate income, and then look at this first yellow arrow. It shows a one-person household, two-person, three-person, four-person. So the income limit's at 107,650. That is a really nice increase over the past. Once you get to a household of 5 people, that includes the kids also, look, it jumps up to 142,000. That's really awesome. You can see some other counties here, and you can go in and check and see Salt Lake County is higher than Utah County. There are very limited areas, hardly any areas at all in Salt Lake County that are USDA eligible. There's a few places in Utah County. I wanted to show you an example here of a comparison between a 5% down conventional, a 0 down USDA loan, and a USDA loan where you did a little bit of a buy down in the interest rate. So we're using $500,000 purchase price, 740 FICO. You can see the rates up here at the top. You can see 5.625 on conventional, 5.125 on USDA. That's a big savings in interest rate right there. And then you can also look and see here our PMI, or what the USDA fee is. Conventional's at 158, USDA's at 145. Upfront guarantee fee, conventional doesn't have one. The USDA $5,000 is rolled into the loan. The big one here is the conventional is requiring a $25,000 down payment. USDA requires nothing or no down payment. This last column I threw on for fun, saying, hey, if you, rather than paying 25 grand as down payment, why don't we use 7,000 of that and buy down the rate? That's what this option is. So you can see here what total monthly payments are. The first two columns, the conventional with 5% down versus USDA 0 down, you can see the payments are almost identical. The conventional is $2 cheaper. But if we went in with a little bit of a $7,000 buy down, you can see that the client would save $115 a month. Significant savings on that monthly payment. So just a few ideas for you. The USDA loan is one of my favorite loans for clients. VA loans are definitely up there. I think those are great, but you have to be a veteran. If the USDA fits in the area that you're purchasing in, it is a really, really good loan to do. Super, super awesome. And we love that the income limits have been raised to expand eligibility to people. I want to give you a rate update. Today was a big, huge day. The Federal Reserve met today, and we knew that inflation was raging hot. Last week, we had the CPI, which is the Consumer Price Index, came out and showed some really ugly inflation going on. And I know you guys have felt it and seen it. We knew that they were going to raise the federal funds rate. And again, please remember, the federal funds rate is not mortgage rates. They are separate. They are different. I have a lot of clients right now who heard that they raised 75 basis points and they think that the rates went up by 0.75. They did not. In fact, rates even improved today. And let me explain why that is. Inflation is what hurts mortgage rates. As inflation is hot and raging, rates move up. The goal of the Federal Reserve, they want to keep the inflation down around 2%. And their lever or control that they have is by raising the federal funds rate. As they do this, all these commercial lines, the cost of money to banks, the big lines of credit the builders have for building homes, that money gets more expensive because they have raised up the federal funds rate. That will have an effect where it starts cooling off the economy. That starts cooling off inflation. As that happens, that definitely gets the mortgage rates to come down. But today, when the Jerome Powell came out and said, we're raising 75 basis points, it showed to the bond market, the mortgages, the bond market, that the Federal Reserve is serious about getting inflation under control and that they are going to take moves to make sure that happens. So if you look at our chart, you can see how, boy, our inflation numbers came out last week really bad. We got really bad, some bad moves on interest rates over the past few days, but then we had a nice pop back today when there was news and comments from Jerome Powell, the Federal Reserve Chair. It's good. We have felt like they've had their head in the sands. We are happy that they are being aggressive and paying attention about getting inflation under control. They are even admitting themselves now that this big of jumps in raising the Fed funds rate, that slowing down the economy, slowing down inflation is not likely going to be a soft landing. So be aware of that. I know there are a lot of people out there freaked out thinking that this is hurting mortgage rates. Well, mortgage rates had already been hurt by the inflation numbers. Today was actually a benefit to our interest rate. If you have any questions, let me know. I'm always happy to help on scenarios, USDA loans. Even if I'm not licensed where you're at, we love being a resource and helping you get your scenarios run, answer questions, give you any guidance you need. My name's Miles Pitcher. I'm the owner of Superior Lending. We will be back next week with another mortgage tip for you.